Hello everyone, and thank you for joining me for another video. This is Accounting Tax SOS. My name is Christopher Cox, and in this video we are going to cover cash and notes receivables. Most specifically, we're going to learn how to determine the rate used to discount a non-interest bearing note. We are going to be able to determine the explicit interest rate. And lastly, we are going to learn how to figure the interest revenue that appears on the income statement. So let's go ahead and get started. Okay guys, here we are at our sample scenario. This scenario is super good because it is short and sweet. There are three very important points that if you learn the fundamentals, I promise you will be ahead of the game. So let's go ahead and get into it. Starting at the top, the balance sheet of oil companies as of December 31st, 2018 lists $1,002,000 of notes receivables and $25,000 of interest receivables included in current assets. The notes that make these up are listed below. I'm at the first red bullet point in the middle. Note number 1. So as of August 31st, 2018, the principal of $420,000 with interest at 14% due in February 28th, 2019. Note number 2. That is in June 30th, 2018, principal of $270,000, interest due March 31st, 2019. Note number 3, this is $320,000 face value, and note that this is a non-interest bearing note due September 30th, 2018. That is the date started, and then the due date is in March 31st, 2019. So let's go ahead and go down to required number 1. I'm at the red bullet points at the very bottom here, and we will start with number 1 here. So it says, hopefully you guys can read my handwriting, but in case you can't, that is why I'm reading it for you all. So it says, determine the rate used to discount the non-interest bearing note. And the non-interest bearing note is here at the bottom, the one with a $320,000 face value. So the first thing we're going to do is we are going to combine these values right here, here, and here, all the notes payable values, and these are all at face value. So I'm going to combine all those, 420,000 plus 270,000 plus 320,000. And you should get $1,010,000. Next step, we are going to go here and find the amount that is listed on the balance sheet as of December 31st, 2018, which is $1,002,000. So $1,002,000. And we're just going to do some simple subtraction, and you'll get $8,000. This is not the answer because I'm going to do a little visual real quick because this helps me. Hopefully it'll help you all. If you aren't, if you haven't seen this concept before, I think this will help a little bit. So we're going to look at the dates of these notes here. We have 9/30 and 3/31. We are going to draw out a little timeline. 9, 10, 11, 12, 1, 2, and 3. Obviously this is September, October, November, December, January, February, March. Okay, so something very important is that up here it says the balance is listed as of December 31st, 2018. So we can go ahead and stop here because it says this is the balance sheet date. So it doesn't record anything that happens past that date. So whenever we're talking about these dates here, we can exclude September because this note is made on the last day of the month. So we can include October, November, and December. That is a total of 3 months. And that will be important in just a little bit. So what we do now, let me go ahead and make another point. We have another 3 months over here that is not recorded for. So to find the rate, we are going to have to multiply this one by 2 to get a total of $16,000. Okay. We're still not done yet because this is not a rate. This is just a value. So to get the rate, we're going to divide into $320,000. And we should get a value of 5%. And like I was saying earlier, we have 6 months here that will be accounted for eventually. So we're going to go ahead and go down here and take this 5%, and we're going to multiply that by 12 divided by 6, and we will get 10%. And this is the discounted rate for the non-interest bearing note. So I'm going to go ahead and write this over here for our answer. 10%. Okay, we got number 1 done. That was easy. We are going to go ahead and move on to number 2. Because I don't have too much space, I'm going to have to go ahead and erase this. If you all need to, feel free to go back in the video. If you haven't already copied this down, you can go ahead and do that. All right, so number 2, look at it. Number 2 is, these are all pretty simple, but you just need to understand what to do with the values and the dates. So hopefully I can help you all out with that real fast. So looking at number 2, it says determine the explicit interest on note number 2. Okay, I have this here. Determine the explicit interest on note number 2. So first thing that we're going to do is we are going to get the information we already know, which is $25,000 of interest that is included in current assets. So we're going to go ahead and write this down over here. $25,000. Okay. The second step is to find the interest on note number 1. And it is not 14% because we still have a little more time. We need to figure out the interest that is as of December 31st, 2018. So to do that, we're going to do just a little bit of a computation real fast. So first thing we're going to do is take $420,000. Okay, and then we're going to multiply that by 14%. And then we are going to multiply that by 4 out of 12. And I'll show you how we got this 4 out of 12, and I'll draw another timeline real quick. So we have 8, 9, 10, 11, 12, 1, 2, and 3. And like last time, I'm going to draw a little break right here because this is the balance sheet date. Date it was made on the balance sheet. And because it says 8/31, because it says August 31st, we cannot count the month of August because it was made at the last of the month. So we can include September, October, November, sorry, my letters and my numbers mixed up, 3, and December. And that is a total of 4 months. And we're not going to worry about this over here for right now because we do not need to figure out the interest past the balance sheet date. So this is where I got the 4 out of 12. So once you do that, you will get $19,600. And we can go ahead and write that over here. 19,600. We're going to do a little subtraction and we will get $5,400. And this is not your answer just yet. What you're going to do is, like in last problem, you're going to divide by 270,000. Okay. You will get 2% as your answer. And then you have to multiply that 12 by 6, that 2%, sorry, 2%. And you will get 4% as your rate. So if you guys are wondering how I got the 12/06, we're just going to go back to this timeline here. I'm going to add a couple months, 7 and 6. And that is because of this June 30th, 2017. So, like I said before, if it's at the end of the month, you cannot count that month. Okay, so we have 1, 2, 3, 4, 5, and 6 months that we can account for. So we have 12 out of 6, and we use that here. So the explicit interest rate on note 2 is 4%. Okay, guys, moving right along, we're going to go ahead and go down to the required number 3. Okay, so required number 3. Required number 3 is super simple. I'm just going to go ahead and get right into it. What you're going to do is, so to find the interest that appears on the company's income statement, is you're basically going to take all these interests that you've figured out and you are going to add them together. I'm going to make it a real quick point. Well, I'll make that in just a second. So the last values we had 16,000. Sorry, no, we had 19,600. Then we had 5,000. We had 5,400. And then we had on note 3, the non-interest bearing note, $8,000. Before you guys say anything, we cannot include the whole $16,000 on this note because this is as of December 31st. So whatever happens after 12, the balance sheet the balance sheet date right here, we have 1, 2, and 3 months that this note is due. We cannot count these because we have not incurred those dates yet, so we have to stop at 12. So we're taking half of that. So we have a total of 8,000 here. I don't have this already calculated. Let's go ahead and go to the calculator real quick. 19,600 plus 5,400 plus 8,000. You will get a total of $33,000 that should be listed on the balance sheet, the income statement on December 31st in 2018. So I'm going to write that over here. Alright guys, thanks a million for watching my video. Hopefully this helps some of you all out there. There's some very important points in this video when talking about when to use these dates and what fractional dates to use. It is very like 6 out of 12 and 12 out of 6 it's really very crucial to know when to use these. But soon I'm going to be doing a video on how to capitalize interest, which is very intensive on these types of dates and when to capitalize your interest throughout the year. So thank you guys so much for watching this video. I will catch you all in my next video, which will be a tax video. This was accounting. I'm trying to switch up my videos every other day. So go ahead and stay tuned for my next video about tax. Thank you guys so much for watching, and I will catch you guys later.